In today's video, I'm going to be sharing with you a simple trend following strategy that you can use to make money consistently in the forex market. This strategy is known as the MACD. The MACD stands for Moving Average Convergence Divergence. This is an oscillator indicator which is used to identify a beginning of a trend. It helps us to know when a new trend is about to begin. It helps us to know when a trend ends and a new trend is about to begin. So it helps us to know the reversal of a trend. So the MACD is like the EMA, the moving average, right? But the MACD is more unique. That is why it is known as an oscillator indicator, because it will help you to know when the trend is strong and when the trend is weak. So you are going to learn everything about the moving average convergence divergence. You know how it is being plotted, and also you will also understand how you can trade it profitably in the forex market. Ladies and gentlemen, you are once again welcome to my channel. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. In this channel, I talk about forex trading and various strategies on how you can profit in the forex market. So today we are talking about the MACD. The MACD stands for Moving Average Convergence Divergence. It is an indicator, an oscillating indicator that helps us to know when a trend is about to reverse. Let's assume the market is in an uptrend, right? How do you know if the uptrend is coming to an end? If a new downtrend is about to begin, or let's say a market is in a downtrend, how do you know if the downtrend is about to end and a new uptrend is about to begin? So the MACD will help you to know when a new trend is about to begin and when an existing trend is about to end. So that is why this indicator is very powerful once you know how to use it very well. So when we talk about the MACD has three lines. We have the MACD line, we have the signal line, and we have the histogram. The MACD line represents the moving average, while the signal line is the moving average of the MACD. While we have the histogram represents the distance between the MACD and the signal line. So what you should be paying attention is just two things, that is the MACD line and the signal line, right? So you should be looking at crossover. That is what I call it convergence divergence, right? It is a moving average, right? It acts like the normal moving average that we know, like the simple moving average, the exponential moving average, right? But why the MACD is more important is that it helps us to know if the trend is strong or not, if there is a momentum in the market or not. The moving average can just tell us the reversal of a trend, whether if the trend is going up or down, but it doesn't tell us if the trend is strong or weak. But the MACD will tell us if the trend is strong or weak based on the histogram. If the histogram is large, it means that the trend is strong. It means that the momentum is big. But if the histogram is small, it means that the trend is lesser, right? The momentum is small. So with the histogram, you will know the strength of the trend. So we are going to dive into the practical aspect of this so that you will understand this strategy very well. And like I said, this strategy is all about crossover. That is what I call it convergence divergence. When there is a crossover between the two lines, the MACD line and the signal line. So we're going to dive straight to the screen so that I will show you an example of how this indicator works extremely well. So if you are new to forex trading, you should be able to understand that TradingView is one of the best platforms that traders use for their technical analysis. So for you to be able to plot out the MACD indicator, you need to go to TradingView, go to indicator and type MACD at the search, so it will come out, right? So once it come out, you will see something like this. It will appear like this. You see a new window. It will appear in form of a new window, right? So you see something like this. So this will be the normal chart, right? The candlesticks, the normal chart. Then below it will be a new window for the MACD. So now the MACD comes with a default setting. So I wouldn't advise you to start changing the setting. Just leave the setting as it is, because the person that invented it has already done the calculation and given us a default setting. So changing the setting is of no use. So I would advise you to stick with the settings, the default setting, so you don't need to change anything in the settings. So once you have plotted the MACD on a chart, it will look like this. Like I said, it will look like this, right? It will look like this. So we will see three things. One is the histogram. This is what we call the histogram, right? This is what we call the histogram. Then we also have the MACD line and the signal line, right? So the two lines have different functions. They have how they perform, right? The MACD line is considered a faster moving average, while the signal line is considered the slower moving average. So we should be looking at a crossover from the MACD line to the signal line. So when the MACD line crosses above the signal line, it means that the market have changed from a downtrend to an uptrend. And when the MACD line crosses below the signal line, it means the trend have changed from an uptrend to a downtrend, right? So then you look at the histogram. The histogram, the strength, the size of the histogram tells you the strength of the trend. If the histogram is very big, it indicates that the trend is strong. But if the histogram is small, is tiny, it means the trend is small, right? The trend is not that huge. So these are the things you should consider. So this is the histogram, right? So whenever you want to know whether if the trend is big or not, if the trend is strong or not, you look at the size of the histogram. So if you watch here, you see that this histogram here, they are very big. The sizes are very big. So that is why you see this long bullish momentum. You can see how long the candlesticks are, right? But if you look here, you see that here the histogram is very small. You can see how small it is. That is why you see these small candlesticks, right? You can see that the momentum here is not that big. So the histogram helps you to know if the trend is strong, if there's a strong momentum, right, in the market. So what I mean by momentum, a strong momentum, is when there's a big bullish candlestick, if the trend is up, just like the one we see here. You can see this candlestick is big, this one is big. Or if there's a if there's a big bearish candlestick, if the trend is down, like this one, I can see that the candle is very huge, right? So the histogram will help you to know if the trend is strong or not. So now the two things again you need to look at is the MACD line and the signal line. Like I say, the MACD line is the faster moving average, while the signal line is the slower moving average. So you have to wait for the faster moving average to cross over the slower moving average. So that indicates a change in trend. So now this white line is the MACD line, while this red line is the signal line. So you can see that the red line is slower, while the white line is faster. So the white line is the MACD line, while the red line is the signal line. So you should be looking for crossover, right? That's what we call it, convergence, divergence, moving average, convergence, divergence. So whenever there's a crossover, between the two lines, it signals a change of trend, right? So now you can clearly see that the trend was formerly up. You can see that the trend was going up. You can see the trend was going up. You can see these green candles, so many green candles. The trend was going up. Then what happened? The MACD line, which is the white line, crossed below the signal line, which is the red line, right? So what happened? We have what we call the bearish trend. The market now went into downtrend, right? So you can see that immediately the crossover occur, we have this down move, right? We have this down move. And what happened again? When the MACD line, which is the white line, crosses above the signal line, which is the red line, it indicates a change of a trend. It means that a new uptrend has begun. So if you watch, you see that the market was in a downtrend before, and when the MACD line, which is the white line, crosses above the signal line, which is the red line, the trend now change into an uptrend. So you can see that immediately the crossover occur, the trend now start going up, right? So the trend now change direction and start going up, right? So you have to be looking at the crossover. So if you watch again, you see that the trend now went up to this point, and what happened again? The MACD line, which is the white line, crossed again below the signal line, which is the red line, right? Indicating another reversal, telling you that the uptrend is over and a new downtrend is about to begin. So immediately the crossover occurred, you can now see that the downtrend now begins, right? So you can see the red candle going down, telling you that there's a change in trend. So you can watch and see that the trend went all the way to this point, and what happened again? The MACD line, which is the white line, crosses above the signal line, which is the red line, indicating a change of trend, telling you that the trend have changed direction. So we now have a new uptrend. Formerly it was a downtrend, and when the crossover occurred, we now have an uptrend. So when the MACD line crosses above the signal line, right, it indicates a change of trend. It means an uptrend has begun. So you should be looking to buy, right? And when the MACD line, which is the white line, crosses below the signal line, which is the red line, it indicates a change of trend. It means that a new downtrend has begun. So you are meant to sell. So this is a simple trend following indicator. A simple trend following indicator. It acts like the moving average, right? But the difference between the moving average and the MACD is that the MACD has a histogram which acts as a volume, or in other words, you can call it a momentum. So this is what differentiates the moving average and the MACD. That is why so many traders prefer the MACD compared to the moving average, because the moving average will not tell you if the trend is weak or strong. What you get from the moving average is just a crossover, but the MACD will tell you if the trend is strong or weak. So what most traders do is that they combine both the moving average and the MACD indicators together to get a better high probability trading setup, right? So when the moving average, when a crossover occurs in a moving average and a crossover occurs in a MACD, it confirms to them that a trend have changed direction. So what they do is they will wait for a crossover to occur at the MACD, and after that they will now wait for a crossover to occur at the moving average. So once a crossover occurs at the moving average and the same crossover occur again at the MACD, it now indicates to them that the trend have actually changed direction. So combining the MACD with the moving average gives you a 95% win rate, because it gives you a clear confirmation that the trend have actually changed direction. So you can clearly see that this strategy is very simple. It's just a trend following strategy, and it will work extremely well when the market is trending. But if the market is ranging, you will get whipsaw, right? Whipsaw means the MACD will be crossing over, but yet the market will not have any direction. Why? Because the market is clearly in a range, right? So the MACD acts like the moving average. It works extremely well during a trending market, right? Because it is when the market is trending that you can make this, because it is when the market is trending that you can make use of this strategy very well. So once you are trading with the MACD, you should be looking at a crossover, right? You should be looking at a crossover. Like I said, if the MACD line, which is this white line, crosses below the signal line, which is this red line, it indicates that a trend have changed direction. So it is advisable that you go to your chart, go to your demo account, go to your indicator, and then click this MACD indicator so that you can be able to understand what I'm talking about, right? Once you click the MACD indicator, this window will pop out, right? Use the default setting. You don't need to change anything, just use the default setting and watch for crossover. So the only thing you need to understand in this MACD is these three things: the histogram, the MACD line, and the signal line. Once you understand their actions, how they perform, you can be able to trade this strategy extremely well. Like I said, the histogram here helps to tell you the strength of the trend. It helps to tell you the momentum, the volume of the trend, if the trend is strong or weak. Why the MACD line is the faster moving average, it reacts faster. Why the signal line is the slower moving average, it reacts slower. So what you should be looking at is a crossover from the MACD to the signal line. So when the MACD line, which is the white line, this white line, crosses below the red line, which is the signal line, it indicates a down move. The trend have changed to a down move. The same thing applicable to up. If the MACD line, which is this white line, crosses above the signal line, which is this red line, it indicates a bullish momentum. It tells you that the trend have changed into bullish. Buyers have stepped into the market and they are going to push the price up. So you should be looking at this crossover once you are making use of this strategy. So in our next video, I'm going to show you how you can combine the MACD indicator with a moving average so that you can get a better trading setup, right? But using the MACD indicator alone is still profitable. It can still give you up to 90% win rate. So using the MACD indicator still has more than 90% win rate. So my advice to you guys is to make sure you back test this strategy on a demo account, and if you are 100% sure it is working for you, you can now implement it in a live account. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I publish new content. I will see you again in my next update. Bye.